Welcome back to the Dividend Diplomats YouTube channel, everyone. You know us by now. We are the Dividend Diplomats. What are we talking about today? Two undervalued dividend growth stocks that I'm going to keep having my eye on in February. In spoiler alert, chances are I'll be grabbing a few shares here and there of these companies over the next few weeks.
Before Bert starts picking up more shares, subscribe to this channel. Give the Diplomats a nice thumbs up. It takes 2 seconds. Click it, show some love and support. Get some DD swag. We've been sending out swag after swag after swag. So hope you guys have been appreciating the DD gear. Rock it hard, rock it proud, and rock it when you're buying passive income assets. So Bert, you've got two stocks that are looking really undervalued. The market's punished them based on either weak news, weak statements by management, but these are still two, long-term plays here.
And that's right. And the key to investing in 2023 is just remembering things are different in 2023 than they were in 2022. It felt like you could just trip over and find some undervalued dividend stocks to buy last year. And that's no longer the case. The market's rebounded. There's some optimism going on from the Fed, their news, some of Jerome Powell's announcements, and even some earnings releases are showing some great news for some companies, which has really picked up the market. That said, we continue to echo this on our YouTube channel. We continue to echo this on Twitter, Instagram, all of our social media. Just because the market's up doesn't mean there are not undervalued dividend stocks to buy. There are always undervalued stocks to buy. You may just have to dig a little harder to find those companies.
Always able to find a stock. So Bert's found two of them here. He already owns them in his portfolio. He's going to bolster them. One of these companies literally hit 100 billion in revenue. And the other one, I know a lot of us consume on a weekly basis, some even on a daily basis, because you're trying to get those gains in, baby. So Bert, who are these two dividend stocks we're here to rock it through?
We're going to talk about Pfizer, and then we're going to talk about Tyson Foods. Both companies, we'll talk about those earnings releases, what's happening, and then we're going to run them through the Dividend Diplomats dividend stock screener, which has 3 metrics. 1, PE ratio less than the S&P 500. 2, payout ratio less than 60%. 3, history of increasing dividends. And then that bonus metric, the good old-fashioned sweet dividend yield. So Lanny, 2 stocks right here. I own them both. The question is, do you own both these companies too?
I own Pfizer in my account, probably one of the first stocks I ever bought back in 2009/2010. One of my longest term holdings. And my wife actually does own Tyson Foods, TSN.
Perfect.
And Bert, these are great stocks. Pfizer, obviously with their vaccines and other sort of drugs that they produce, highly used entity, research and development. Obviously with COVID-19, with the booster shots, plus even the prescription drug, the battle if you have COVID is definitely, I've seen it on the commercials. I know you have, right?
Yeah, that's an excellent segue. Let's just start with Pfizer first, because that really is what covers it. I know my wife and I have been joking lately. It just says Paxlovid COVID. That's the commercial. That's literally all it is. And that's from Pfizer. And we laugh because we both own stock in the company. But that's really what's also driving down this decrease. When you look at their earnings release, they touted their first ever $100 billion year in 2022. Everything is great. They crushed earnings. Earnings per share were over $6 per share in 2022. But then they're also quick to start transitioning into it's going to adjust significantly downwards in 2023 because the COVID bump that Pfizer experienced is coming to an end, which probably for a lot of things isn't a bad thing, but for Pfizer, it's not the best. I think they said Paxlovid, that new drug, had over $18 billion in 2022, just a year alone. So if revenue from COVID-related drugs is going to drop 30%, and a pretty high double digit, like these aren't small numbers they're dropping a lot. Of course, Pfizer's stock price is going to trickle down. So when they compared 2022 actual results to the forecast, you see that big decrease. Revenue, for example, 2022, 100 billion. They're forecasting next year 67 to 71 billion. Big drop. EPS was 658 last year, forecasting 325 to 345. So you can see that's why Pfizer stock price is decreasing. The end is near, and management's already teeing up shareholders, the market, and analysts for the lower 2023 results as a
But hey, Pfizer, they've been through ebbs and flows before. They know how to manage expenses, especially if they're still expecting EPS in that range. In addition, they still have a really solid balance sheet, guys. I mean, with Pfizer, with a declining revenue, you want to make sure that, okay, how does the balance sheet also look like? And guys, they have a current ratio of 1.6 times. That means that they can use their current assets, to cover current obligations. And again, they have a very, very low debt to equity ratio at, under half, literally at 0.4 times. So that's really, really solid for Pfizer. Again, a pretty clean balance sheet right now.
Yeah. So let's run them through the screener. Let's see what's going on with Pfizer. Let's start with that first metric, the price to earnings ratio. Their price is 43.88 at the time we're recording this. Closing price 210. Earnings per share 337. That's a PE ratio of 13 compared to the S&P 500. That's a big discount because the market's PE ratio is between 21 and 22 on any given day right now.
All right, guys. Well, what about the dividend payout ratio for Pfizer? They've been increasing their dividend for a long time. So has that payout ratio crept up with the declining forward guidance on EPS? Is that payout ratio over our 60% threshold? It's not. It's actually still in the sweet spot at 48.66%. So literally half the earnings, they're researching, developing new drugs, trying to continue to be the top player in the pharma game. Yes, top player. Fight me right there. Fighting words. So guys, 48.66% dividend payout ratio. And Bert, back to you for that third dividend stock metric.
That 5-year dividend growth rate is 5.51%. They've increased that dividend for 12 plus years. So, they're halfway to becoming an official dividend aristocrat. I know there's some history with Pfizer too, based on company changing from that. So they've had a longer history of increasing dividends over 12 years, but so the records are saying, so we're going to go with that. And Pfizer just announced a dividend increase back in December. They only increased their quarterly dividend 1 cent. They went from 40 to 41 cents, but it's not the largest, not the smallest, close to their 5-year average. In hindsight, Lanny, that should have been a leading indicator that something was going to come up in the earnings release that wasn't the best news because small increase after a strong year. They're hoarding the cash, they're getting ready, they're building up the safety wall here for the company, which is good. That's what you want management to do.
Not to say writing is on the wall for Pfizer, I think we should expect a penny increase maybe for the next year, maybe 2 years. But again, we'll have to see what earnings results really start to look like. And we'll have to go from there. I mean, great stock though. I mean, 12 plus years, as you said. They've been doing it now through some tough times. But now let's look at the stock price and what that's done to the dividend yield, Bert, because the stock is down 14% as the stock market's up about, 10%. You correct me, Bert, around there.
No, yeah, that's about right. Yeah, so it's moving heavy in the other direction. It's zagging.
So guys, this is a 25% difference. 25%. Market's up 10. Pfizer is down 14.5. So you're looking at a 25% pendulum swing between what the market does and what Pfizer's done.
Yeah, so let's summarize Pfizer here and then move on to Tyson. 1302 PE ratio, 48% payout ratio, 5-year growth rate 5.51, 12 years of increases, and a yield of 3.74. So let's talk Tyson. Let's talk chicken here.
Let's talk a Tyson, man.
Yeah, we're gonna talk some chicken, some beef.
It's Mike Tyson.
Yeah.
Sorry, no, with all respect, Mike, don't knock me out for that.
Yeah, we're sorry. Hopefully you watch this video. That'd be great. Feel free to respond to us on Twitter if you feel like it about with that impersonation.
Might have to bring out a little bit more of the Mike Tyson.
Yeah, we're gonna get him eventually.
I'll do it a little bit more, maybe.
Yeah, that's fine. We're gonna get Mike Tyson to respond. Help us out, everybody. Let's start tagging Tyson in this one when we tweet this out. All right, Tyson, what's going on here? Strong revenue growth. If everyone's been paying attention, what's been going on with the price of beef, with chicken and everything, it is soaring through the roof. So the top line revenue for Tyson is growing as you would expect. Unfortunately, though, they're getting hit with significantly higher costs. It's cost more to raise the animals, it costs more to feed the animals, it costs more to transport the videos, and people cost more. So they're getting hit heavily with a significantly higher increase in cost than they were on the top line. So there's a big mismatch right now in Tyson's financials. Plus, there was some demand decrease too, so they weren't able to sell some of their chicken at the prices that they wanted to. So slight decrease for chicken, higher beef on the revenue side, but higher cost for everybody all along has caused their financials to just look terrible right now, causing the stock price to just drop over the last year.
Yeah, they're down almost 40%, dating back to, 2022. Trading at $60.39, down about 5% this year. They have a big cost saving initiative, so we'll have to see what that does. Bro, I know you and your wife have been gobbling up, literally chewing on this chicken stock over here.
Yeah, we have. It's been one that we've purchased a lot in 2023. So shouldn't be surprised. I'm going to keep adding to it. We've added over 15 shares to our Tyson position. So now we have 58 shares. Our income is $111.38 from our Tyson position. So to me, it's a very easy on my Monday purchases now. Just grab 3 shares of Tyson. That swaps in nicely for that Johnson & Johnson purchase we were doing last year.
That's a Tyson mic out punch.
Yeah.
Now, to talk about the dividend stock metrics, guys, look at that price to earnings ratio for Tyson. TSN is ticker symbol. Now, they're expecting $4.64 for Tyson. And that equates to the same damn payout rate or price to earnings ratio as Pfizer at 13.02.
That might be the first time this has actually ever happened, where it's literally the exact same one for 2 companies, even out to 2 decimals. Look at payout ratio. 192 is their annual dividend. Payout ratio is 41%. So still a perfect payout ratio.
Tyson has been growing dividends for over 11 years. So guys, I'm getting like a New York accent in there, but the 5-year dividend growth rate is 13.79%. Pretty rock solid. Now, I don't know if we expect that going forward, but it's very rock solid. Double digit, again, dividend years and double digit dividend growth rate.
Yeah. So over the last 52 weeks, their price is down 38%. This year's kind of hung tight. It's only down 5%. Still, like Lanny said, large disparity compared to the market. With that, their yield has soared over 3%. Their current yield is 3.18%. So
I could chew on that.
Yeah, Tyson at over 3% is a pretty solid mental block in my mind for when I'm thinking about them.
That's finger looking good, guys. So Tyson's metrics, 13 price to earnings, 41% payout ratio, double digit growth rate and years, 3.18%. We'll put both stocks here. So Bert, I know you've been buying at least Tyson. Do you plan on buying also Pfizer? Like, are you planning on continuing to add to both dividend stocks here?
Yeah, again, what I've been doing with I haven't found one stock that I want to buy every single week for a long period of time after Johnson & Johnson just yet. Nothing is jumping out at me. This is why I'm liking my strategy so far. You can kind of just pivot on the go quickly if you want to, see what the market's giving you and just do something for a few weeks or until you just don't want to do it anymore. So for me, this is going to be very simple, Andy. My wife's account, Pfizer, she has 49 shares. I'm just going to keep buying probably 4 shares of Pfizer for her every single Monday, maybe adding in 1 or 2. That's very simple to me. Tyson, for me, 3 shares of Tyson every single Monday, at least for the next few weeks or so. I'll reevaluate it come March, or if the prices jump up. Very simple, not going to mess around. Just take the single one it's given to you. There's a hole on the left side of the infield. Just slap the ball through there, get on first base, and slowly build your dividend income.
Yeah. I mean, in my wife's account, we actually a couple of weeks ago transitioned off of Medtronic's MDT once they popped over 85, 86 per share. And we've been doing every Monday Tyson, TSN. If they stay under 61, we're grabbing at least 1 share a week in my wife's account. Now, Pfizer, if you guys give me a moment, if I quickly look at the number of shares, I own 170 plus shares of Pfizer. Again, not a super large position. It sounds huge. It is large, but not like one of my top 5, maybe not even the top 10 holding. Again, investing for 13 years, it's bound to happen where it's not a top 10, even though it looks large. I'd like them, the yield, because I know growth rate's going to be probably at or around 2%. I'd like them closer to a 4% yield, honestly. So we'll see.
Yeah, that's the beauty of it. We each have other stocks we're buying. I mean, this is different for you too, because of as you talked about in the article, you're also adding in your other ETFs. You're adding in other things that you're purchasing regularly. So you don't have to run and get Pfizer. You're not in the position where you need to do it to invest. You're already investing. That's the beauty of your automated strategy. It's just
there's only so many organs I can donate for money to buy stock.
That's right. So everybody, let us know. Let us know what you think of these 2 companies. Are you going to be buying them? Put it in the comment section below. How many organs left do you think Lanny has to donate? That's the $1 million question
It's
here.
terrible. No, guys, I mean, you should all be organ donors if you can. But
I don't think that was the question at hand here, Lanny.
let us know what other stocks you're buying, guys. Let us know in the comments. Definitely like the video, subscribe to the channel. We appreciate you guys for stopping by. For what else do you have to add?
If you're not with us, you're against us, everybody. Yeah, that's right.
That was Bert and Lanny from the DD, over and out.